Let's begin top 65 questions for May 24. Don't worry, they are nothing but MTP RTP questions. In MTP1, we have 20 questions, MTP to 20 and RTP. Many students are neglecting MTP RTP questions, especially very important. Earlier, I don't recommend much MTP RTP, MTP especially. But now MTPs are very qualitative. They are truly reflecting how exams are ultimately going to be tested. So kindly don't neglect this MTP, MTP1, MTP2, RTP descriptive questions. By the way, MCQs were already given as a part of separate video. Okay, this is only a descriptive question. Top 65 descriptive. Don't miss especially MTP1 and MTP2. RTP, even if you ignore also no problem, because in RTP, most of them are study material copy pasted questions. Whereas MTP1 and MTP2 especially, they are very creative. Below timestamps were given. By the way, I even spoke about presentation. Okay, for 5 minutes, I spoke about some presentation technique. So that also I will give in the timestamp. Just make use of it. Do well. All the very best for your exam. So let's begin mock test paper 1, CA Inter Auditing descriptive part. I hope you have finished the MCQs part. MTP1, MTP2, RTP put together. One MCQ video has been uploaded. I hope you have finished it. Then watch this. So let's begin with the question. So they'll give you totally 6 questions. Getting it? Question number 1 is compulsory, and out of the remaining 5, any 4 you have to attempt. Question number 1 compulsory means it's nothing but in the first question there is no choice. That's what the meaning of compulsory question. Now, Docs Limited, a service provider company engaged in providing courier services pan India. Pan means presence across nation, not permanent account number. Okay, so they are having presence across the nation India as well as internationally, has appointed an internal auditor, Mr. G, in accordance with the requirements of the Companies Act. Okay, during the year 23-24. The company's annual turnover during the year 22-23, 23-24 has been 300 crore. It's a public limited company. If you observe, it's a public limited company. For each of the above, business of the company has been profitable. Mr. G heads the internal audit department of the company, assessing governance activities, improving risk management activities, and reviewing controls. Yes. Discuss reporting responsibility of stat auditor of the company under Companies Act, specifically in relation to internal audit and related matters. So the company has an internal audit department, and what statutory auditor specifically has to report on internal audit related requirements in the auditor's report. Reporting requirement they're asking. Obviously, in CARO 2020, we have a point on internal audit. Yes or no? We have to talk whether the company has appointed internal auditor commensurate with the size of the entity. Have you considered the internal auditor's report, all that? Yes or no? Look at this. And moreover, remember, this is a public limited company. So obviously CARO 2020 is applicable. So exemption under CARO is not available. So Docs Limited is in the business of providing courier services. As the name of the company and the given facts suggest that it is not a small company, not a private company, not a one person, not a bank, and not a Section 8. Therefore, it does not qualify for exemption under CARO. Hence, reporting requirement under CARO is applicable. Now, while reporting under CARO, the statutory auditor under clause number 14, getting it, of paragraph 3, whether the company has an internal audit system commensurate with the size and nature of the business. Whether reports of the internal auditor for the period under audit were considered by the stat auditor. That's it. Next. By the way, when you're watching MTP videos or whatever it is, when you're reading, you must first have finished the entire preparation. Then only come and read MTP. If at all you have not yet covered the revision part, if at all revision is not yet over fully, better do finish the revision and then continue watching this MTP. Because when you're reading MTP, you must be able to recollect whatever you revised at least. Getting it? Next, UP Uppenhigh Private Limited has started its export business during the year 23-24. The company was catering to domestic market only in the past years. CAH is a stat auditor of the company, is of the view that the company has understated its revenue by 50 lakh in the year 23-24 by not complying with accounting standard 9 relating to revenue recognition. The company has understated revenue by 50 lakh. Okay. Discuss responsibilities of stat auditor to communicate with the management in the above situation in accordance with 450. Also explain usefulness of that communication. And further, if management refuses to correct the misstatement as communicated by stat auditor, how should he proceed? If you look at 450, even in the part 4 of the audit marathon, I've covered 450, objective of 450. Yes or no? Inside that, auditor has to accumulate misstatements identified by the auditor. And what is its effect on the audit? So what is the effect of identified misstatements on the audit? What is the effect of uncorrected misstatements on the reporting? Getting overall audit. So this is the objective. So whatever mistakes the auditor identified, he has to accumulate, which are not clearly trivial, and timely we have to communicate the misstatements to the management, and we need to request the management to correct it. If at all management is not correcting, auditor has to evaluate what is the effect of uncorrected misstatements as a whole on the financial statements ultimately. Then he will decide about opinion things and all. Look at the answer. The above situation is an example of misstatement related to accounting standard 9 related thing. So here what happened actually, company has understated revenue. Like they did not, they understated means it's a misstatement. Probably it is a material misstatement also. Getting it? So the auditor shall communicate on a timely basis all the misstatements accumulated during the audit with appropriate level of management. Timely communication at appropriate level is important so that it enables management to evaluate whether items are misstated materially or not, and inform the auditor whether it disagrees and take action necessary. Sometimes the management may not agree that it is misstated. From management point of view, it might be correct. You might felt based on your assumptions it is misstated. The correction by management, including those communicated by auditor, enables management to maintain accurate accounting books. If management refuses to correct some or all the misstatements communicated by auditor shall obtain an understanding of why management is not making correction and evaluate whether the financial statements as a whole are still free from material misstatement. Nothing but evaluate the impact of uncorrected misstatements on the financial statements. If you think the misstatement is material, then come to 705. Getting it? But under 450, you just have to evaluate the impact of the material misstatement on the financials. That's it. Now, when you come to 705, there it discusses if at all auditor has identified ultimately if the financial statements are materially misstated, which opinion to give. 705 decides. Be able to understand. Next, Prudent Enterprises Private Limited has incurred and fully spent for first time CSR expenditure amounting to 14.5 lakh in pursuance of 135 of the Companies Act, section 135 CSR. The expenditure was spent for women empowerment programs through an implementing agency, not a related party. As per law, it was required to spend 14 lakhs during the year. The spent. Discuss how such information is required to be disclosed in accordance with Schedule 3. If you remember, in part 2 of my audit marathon, items of financial statements, P&L items, there have specifically spoke about CSR related activity, CSR provision. So what a company has to disclose relating to CSR, how much amount required to be spent? 14. How much actually spent? Is there any shortfall? And previous year, if there is any shortfall in this company, for the first time CSR is applicable only for this year. Actually, this point is not applicable. That's why they said not applicable. Reason for shortfall, not applicable. Nature of CSR activity you need to disclose, and whether any related party transactions were there as a part of CSR program, and whether any provision is made if at all any liability yet to be spent related to CSR. No, it is nil. So these are the disclosure requirements related to CSR. You just go to items of financials, inside that CSR expenditure related thing, it is clearly given. Next, CA Tripad, engagement partner, based at New Delhi, is an external auditor of Lap of Nature. Okay, Lap of Nature, a firm. You are an auditor of a firm. The client is a firm, not a company. Since last 3 years, the firm is engaged in business of providing tourism services, including holiday packages to the club members. Okay, Lap of Nature, no, they are providing tourist activities, tourism services. It is also provided auditor, including his team members, free holiday for a week every year in one of its premium resorts in Ooty in the state of Tamil Nadu. The company has also booked free aid travel for the engagement team during all these years. Okay. Discuss why chartered accountant is not acting ethically. How are familiarity threats? Obviously, when we are taking any benefit from the client, no, it creates a sympathy. We will become more sympathetic to the client. It creates a familiarity threat. So straight away, the firm is providing free hospitality. In such a circumstance, fundamental principles are violated. Such act of hospitality are capable of affecting, impairing, reducing objectivity of the auditor. This situation signifies that auditors have formed a relationship with the client where they may end up being too sympathetic. He is doing so much for us. Why should we report all these misstatements? Due to free hospitality enjoyed by the engagement team, they may take a sympathetic view to the issues that we identify in audit. In this way, familiarity threats have been created in this situation. Next, they gave a situation how a familiarity threat has been created here. How it is created? Because they are providing too many benefits to and all to us. So whatever issues we identify in auditor, we may not report it. We may not, we may cover up. We will not be very, we will not be as per our duty. That's how it is creating a sympathy on the client. Next. Mention any four financial, second question. Mention any four financial events or conditions. By the way, here, one common question many students ask is how to present. Very simple. Every question, whenever you're starting, you should start at the fresh page. Or else I'll do one thing. I'll do a presentation related timestamp below separately, specifically. Or else it's okay, fine. I'll put a timestamp below, better. So, presentation. First, question number 2A. Like this, you must mention on the top. And on the side also, you must mention question number 2A. Now, look at this question. For example, right now I'm solving, Just a minute. Mention any four events or conditions that individual or collectively may cast a significant doubt on the entity's ability to continue as a going concern. So, it's a straight question. So you can straight away write the following are the various financial events or conditions that may cast significant doubt on entity's ability to continue as going concern. Now here when you're writing, the following are the factors, financial factors or conditions that may cast a significant doubt. So point number 1, point number 2, point number 3, point number 4. Net liability position, underline the word net liability. Net working capital liability position, underline that. Negative operating cash losses, underline that. Getting it? So, outstanding loans approaching maturity without any prospective renewal, underline that, without any prospective. In every point, you have to underline the keywords. So, like that. So, here they have given some various indicators. Any 4 points if you write, enough. What is the marks? 4 marks. So, any 4 points if you write, that's enough. Next. Adequate planning benefits the audit. Actually, here there is no much big deal. Actually, for D, 1D, I think here presentation requires. What you can do here, how you can present is, you can write like this, relevant provision, or you can also write, or you can side heading. First paragraph you always dedicate for explaining the concerned theory part, concept part. Getting it? So the auditors are suffering from various threats to independence. One of the threat to independence is familiarity threat. The familiarity threat is created because of close association, close movement with the client. Getting it? And one of the factors for affecting familiarity threat is the auditor may end up in a situation being sympathetical to the client because of the benefits he is receiving from the client. In the given case, the auditor is receiving tour package benefit from the client every year, due to which the engagement team might become sympathetic towards the client, and in this way, a familiarity threat has been created. You see, in this way also you can write. Getting the point? So first paragraph you always write a relevant provision. Next paragraph you write about in the given case what happened with a conclusion. And remember, whenever you're writing conclusion or any important things, underline what you're writing. Whatever in your answer, whatever key point is there, you must underline. Getting it? Next, we'll explain everywhere that presentation, how it should be presented. The auditor carries out his work by adequate planning benefits the audit of financial statements in several ways. Yes, it's a straight question from audit strategy chapter. What are the benefits of planning? It helps the auditor in devoting appropriate attention to important areas. It will help the auditor identify and resolve potential problems on a timely basis. It will help auditor to properly organize and manage the audit engagement so that it is performed in efficient and effective manner. It will help the auditor in selection of engagement team member with proper capabilities and competence. It will facilitate the direction and supervision of the team and coordination of the work done everywhere. Yes or no? Any 4 points is enough. Here 6 points were given. Any 4 is enough. Next. The auditor carries out his work by obtaining audit evidence through performance of audit procedures. However, there are practical and legal limitations on the ability of the auditor to obtain audit evidence. Give one example each. Very simple. For practical limitation, what is an example? For legal limitation, what is an example? Legal limitation. Suppose the management is refusing me to give books. I cannot pressure the management. I cannot, put a police complaint on the management and enforce them to give me books. I cannot pressure them. If at all they are not giving me, legally I can't do anything. So it's a legal limitation. 2, practical limitation. The volume of transactions are so many. We can only do audit only based on sample. We cannot do 100% verification. Yes or no? That's it. Examples of practical. An auditor does not test all the transactions. He forms opinion based on only sample. It is an example of practical limitation. Example of legal. Management may not provide complete information. There is no way auditor can force the management to provide complete information as requested. So in case it is not provided with requested information, he can only report about the same. It is an example of legal limitation. You see, whatsoever we discussed conceptually in our regular class or even in the marathon, if at all you don't understand so conceptually, you can't even imagine how close you have to write these answers. If a student do not understand conceptually this auditing subject, just mugged up based on some short notes as flowchart materials, he can never answer this. He can't even imagine how to write these answers. At least those who followed the right approach, to some extent they can imagine what to write. This, to some extent they can understand what they're asking exactly. Next, 2D. Goods and Services Tax Network is a non-profit limited by shares company. It's a company. Its 50% shareholding is union, 50% with different. A combination of central and state is owning 100%. It's a government company. The company provides IT infrastructure and services to various stakeholders, including government and taxpayers. Okay. The company is in operation since past few years, and subsequent auditors need to be appointed during the year. Okay. The subsequent auditors have to be appointed. Fine. Who appoints stat auditor of such a company described above in accordance with provisions? It's a government company. C&AG will appoint first auditor. C&AG will appoint subsequent auditor. The subsequent auditor of government company shall be appointed by C&AG within 180 days from the commencement of the financial year. It is actually a company audit question. It's an audit and auditors chapter question in company law, and the same provision are covered in government audit also briefly. Subsequent auditor of a government company shall be appointed by C&AG within 180 days from the commencement of the financial year, and his appointment is valid up to conclusion of the next AGM. Can any directions be issued to the stat auditors of the company? Yes, C&AG can issue directions on what are the special areas to be focused on. C&AG has power to conduct supplementary audit and test audit also. You see here. So appointment of subsequent auditor, C&AG can appoint. So since government, it's a government company where predominantly it is controlled, it's a government company. So appointment of subsequent auditor, C&AG. The C&AG shall appoint the auditor, subsequent auditor, and direct the auditor the manner in which accounts are required to be audited, and they're required to be audited, and audit report has to be given to C&AG. So among other things, C&AG can also give some directions if any, getting it, and the action taken thereon, auditor has to give a report. That's it. So it's a straight simple question. It's there in government audit chapter directly. Government audit is nothing but part of audit of different types of entities. 3 marks question. Third question. Suniti, a CS student, is part of an engagement team conducting audit of a company, TIM Private Limited. According to audit program, she is responsible for verifying purchases and PPE items appearing in books of accounts from records and bills of the company. Okay, so her responsibility is what? Purchases audit, PPE audit. Besides, she has also been entrusted responsibility to obtain written representation from management regarding carrying out physical verification of inventories during the year. During the course of her work, she finds that one purchase bill amounting to 5 lakhs pertaining to TIM Industries has been entered in books of accounts of TIM Private Limited. Okay, 2 companies were there. One is TIM Industries, another one is TIM Private. Purchase bill pertaining to TIM Industries, that they were appointed. Probably these two are associate concerns. Books of accounts are commonly maintained at one location for these two entities. One is TIM Industries, one at a time. So one company related, one entity related purchases was wrongly entered in another company where we are doing audit. The management has refused, another issue, to provide a written representation relating to physical verification of inventory during the year. She has brought it to the knowledge of engagement partner, who decided to use lack of such representation as an audit evidence. Okay, so like company is not giving representation. I went and told my partner, sir, they are not giving representation. My partner said, okay, they are not giving, that itself is an evidence. And let us see. Discuss whether each of the above constitute evidence. State reasons for your answer. Obviously, absence of evidence, absence of information is also an evidence using which we can modify the opinion. Non-availability of sufficient and appropriate evidence, that itself is a basis for our modified opinion. Yes or no? So even if evidence is not there, that is also an evidence. And whereas this one purchase bill wrongly amounted. This is a clear-cut evidence. Look at it. The audit evidence comprises both information that supports and corroborates management's assertions and any information that contradicts with such assertion. Purchase bill of 5 lakh rupees pertaining to Tim Industries has been entered. It is contradicting management assertion relating to purchase. Obviously, yes or no? So evidence, not only evidence can be supporting to the assertions entered in the books of accounts and financials, or evidences can be contradictory to the items entered in the financial statements. Here we got a contradictory evidence. That is an evidence. Further, the absence of information is used by auditor, therefore is also constitute. If at all company is not giving information, that itself I will take it as an evidence. That itself is an evidence for me to give a modified opinion. In the given case, management refused to provide representation relating to physical verification of inventory. Therefore, absence of information or rejection of information by the management itself is an audit evidence. Using this, auditor will give a modified opinion. That's it. CAB, this is actually there in our SA 500 discussion, and this is government audit discussion. This is government audit discussion. This is NO, is nature, objective and scope of audit. Inside that, inherent limitations are there. Inside that, practical and legal limitation concept is covered. This is audit strategy, planning and program. This is obviously going concern 570 symptoms related symptoms question. And this is obviously nature, object, not this, sorry. It is about ethics and terms of engagement. Ethics and terms of engagement chapter is there. Inside that ethics, inside that familiarity threat discussion. And this is obviously items of financial statements, CSR related, disclosure related question. This is of course 450, and that's it. So everywhere I'm giving reference so that you can immediately open your book and read. CAB is stat auditor of Boom Payments Bank for the year 23-24. So you're auditor of a bank. Payments bank is also a type of bank. Remember, during the year, banking regulator has imposed restrictions on the bank from accepting new deposits due to non-compliance in conducting KYC in large number of accounts and violation of rules aimed at preventing money laundering. Best example, Paytm. This is Paytm situation only. Paytm bank, Paytm Payments Bank license has been rejected by RBI. That exact question is tested. You see, whatever is happening in the industry is being tested now. Getting it? Paytm 4 months, hardly 4 or 5 months ago, somewhere in December or January, I'm not sure exactly, some 1 or 2 months plus or minus, Paytm's bank, Payments Bank license has been revoked by RBI, saying KYC norms are not being followed by Paytm properly. Exactly. Paytm is a payments bank. Airtel is a payments bank. Exact Paytm situation. There is a material uncertainty regarding probable outcome of such restrictions on ability of the bank to continue as a going concern. Okay, going concern. However, for the year 23-24, auditor has concluded that use of going concern basis of accounting is appropriate. The financial statements of the bank do not make adequate disclosure of material uncertainty due to the above events. So Paytm, they prepared 197 communications, they prepared using going concern basis, mentioning that there is a material uncertainty regarding RBI punishment. RBI may withdraw that particular thing. What are the implications in the auditor's report in view of the above? Company did not make any adequate disclosure regarding material uncertainty related to going concern. Adverse opinion you must give. You see this? The financial statements of the bank do not disclose the material uncertainty. So auditor has to express a qualified or adverse opinion, and in the basis for qualified and adverse, you need to state that a material uncertainty exists and the financial statement do not adequately disclose the matter. You need to qualify or you need to give an adverse opinion depending upon the severity. That's it. Please read this answer. Don't neglect it. Every answer, not just this. Every answer you have to read once. It is like a revision for you. Next. Auditor shall develop an audit plan that includes description of audit procedure. Specify requirements in this regard. So you should develop the plan. What are the elements of plan? Very simple. Straight a simple question. Auditor shall develop audit plan which shall include nature, timing, extent of planned risk assessment, nature, timing and extent of further audit procedure, other planned audit procedures that are required to be carried out as per standards on auditing. So what are risk assessment procedure you are performing? What are further audit procedure you are performing? Any other planned audit procedures required to be carried out so that any other procedures as per standards on auditing, various standards on auditing, getting written representations, all that. Getting it? So auditor while developing the plan should include the following 3: risk assessment, further audit procedure, any other planned audit procedures that are required as per so that you can comply with the standards on auditing. This is a straight question. This is actually a straight question. What is meant by audit documentation? What are the objectives of an independent auditor in accordance with 230? What is meant by audit documentation? What are the objectives? 230, straight question, documentation. The purpose of documentation is it will act as an evidence. And it is an evidence that audit was properly planned and performed in accordance with the standards on auditing. And this is the base for our opinion. So, no. It is a sufficient appropriate record for the auditor's report. And it's an evidence that audit was planned and performed as per standards on auditing, legal and regulatory requirement. Over. That is the objective of SA 230. Read the answer entirely. You are part of an engagement team conducting audit of an entity engaged in manufacturing business. State few audit procedures you would undertake to perform to verify that recorded sales in the financial statements represents goods actually sold during the period, and recorded sales are not overstated. Whatever recorded sales were there, they're actually existing occurrence. Getting it? They are recorded, verify recorded sales or represents goods actually sold. Occurrence assertion they are testing. Getting it? So the following audit process to be performed to verify whether the sales represent goods actually. Check whether a single invoice is recorded twice. It's nothing but sales audit. I even covered in items of financial statements audit, P&L items. Please go through that. I'm not reading it here, but you read it again. It's like a revision for you. Next. While performing statutory audit of contra industries, wait, pause the video. First read the first completed. Whatever questions we completed, first read it. Then you continue. While performing statutory audit of Contra Industries Private Limited, a company engaged in manufacturing and assembling of LED lights, CA Varun has decided to attend physical inventory count process of the company on 30th and 31st March 2024. The inventories are lying at 3 different locations. 2 A and B are in one city and the third one is in another city. Further, company also sends inventories to some service provider for quality control. So inventories are with the third party also, and testing for testing and quality control. Which is not, since it is not available to the company, they are sending for quality control and testing. CA Varun is well versed with the type of industry, so he has very good knowledge on the industry and prepared a list of the following matters which could be relevant to him in planning attendance at inventory count process for discharging his responsibility. Okay, he has prepared a following checklist items to verify. So he want to check nature of inventory. Is it LED light, parts, circuits, what, panels, work in progress, finished good, what, materiality of inventories. So where, in which location, what quantum of materiality available, stage of completion of work in progress. So he need to just observe that. Maintenance, whether the company is maintaining perpetual inventory system, you need to observe that. Materiality of inventory lying with the third parties. If it is material, we perform external confirmation or we send another auditor, like that. Timing of inventory counting. There are 2 important matters which do not find place in the above list. Without considering these crucial matters, it would be difficult for the auditor to properly plan his attendance at inventory count. Discuss such matters. You see here. You need to check whether management has given proper instructions for physical inventory counting, whether adequate instructions were provided to the staff who is doing physical inventory counting. So the auditor has to evaluate management's instructions for recording and controlling physical inventory counting. So it is important for the auditor to know beforehand how inventory count will be conducted so that the counting process is effective. And what are the controls related to inventories at different locations? Nature of internal controls that is there. Auditor has to observe when you are planning attending at inventory counting. First thing you should keep in mind is what inventory. Before all, first understand what is inventory. Then you should understand what type of controls are relevant. Because suppose if the inventory is gold items, the controls, the nature of internal controls are different. So nature of controls is one of the important thing auditor has to verify. 2, what instructions are given by the company to the management, the staff who are doing inventory counting. Right answer you can find in our book also. In essay 501, what are the points auditor has to consider while planning attending inventory counting? Next. The statutory auditor should decide whether relevant information is properly disclosed in financial statement. Explain with reference to scope of audit. The auditor should decide whether relevant information is properly disclosed. Explain with reference to scope of audit. The straight question, scope of audit, first chapter. The auditor should decide whether relevant information is properly disclosed in the financials. He should also keep in mind applicable requirements. So you can verify that whether financial statement properly summarizes transactions recorded therein by considering judgments made by the management. The management is responsible for preparation of financial statements and they make many judgments in this process. For example, choosing appropriate accounting policy, all that. Auditor also evaluates selection and consistent application of accounting policies, whether such a selection is proper, whether chosen policy is applied consistently on year. So scope of audit question is there. Inside there some points. You just open scope of audit, nature, objective, and scope of audit chapter. Inside the scope of audit question is that answer only. Next. Standard on quality control 1 dwells upon engagement quality control review as a part of system of quality control in a firm. Yes. Why is such a review required? For which type of engagement EQCR is mandatory? What should be the approach of the firm for EQCR? What should be the approach of the firm for engagements for which EQCR is not mandatory? We know EQCR is mandatory for listed entities audit, and for other entities where EQCR is not mandatory, the firm itself will devise the criteria. The firm itself develop the criteria on what basis EQCR will be done for the other clients. Why quality control is important? Significant judgments made in engagement. Significant judgment should be reviewed by an engagement quality control for an objective evaluation before the report is issued, so that the report ultimately that we are issuing is appropriate. And this is mandatory for listed entities. For other engagements, firm should devise criteria to determine whether engagement quality control review is required or not, depending upon the severity involved. Next, fifth question. WTE Private Limited is engaged in business of manufacturing a product liable to GST at 5%. Okay. The input raw material for manufacturing this product is liable at 12% and 18%. Okay. As a result, at the end of the financial year, ITC on inputs amounting to 60 lakhs is accumulated in the electronic credit ledger and refundable to the company under the provisions of GST law. How the above amount of 60 lakhs would be reflected and classified in the balance sheet of the company? It's a current asset, other current assets. Under current assets, you will classify GST input and all as other current asset. State few audit procedure to be performed by you for verification of the above balance. How do you verify this? You log into GST portal and cross verify the balance. You check the GST returns and all filed by the company. You see whether input is utilized properly, set up properly or not as per the law. Simple. Now how we check, we straight away blindly cross check with a GST ledger in the website. That's it. In the given situation, 60 is accumulated in electronic credit ledger because of the lower rate of GST on the output. It is refundable to the company by virtue of provisions of GST. Therefore, the above would be reflected and classified as current asset, and that too other current assets. In relation to balance with statutory authorities like GST input, you have to prepare a reasonability analysis with respect to purchases by applying nothing but analytical procedure. Get a copy of GST returns filed. In case of refundable amount is as on the balance sheet date is still outstanding, verify whether the amount recorded is matching with the records GST portal. In case of refundable amount as on balance sheet date is received subsequently, verify it from the bank statement. If at all company claimed the refund and got the refund, check the bank statement. Over. Simple question. But no, it's a different type of question we have never seen in our book. Yes or no? So you read it. The objective of an auditor in accordance with 315E is to identify and assess risk of MMS at the financial statement level and at assertion level, correct? Which specific activities an auditor is required to perform for the purpose of identifying and assessing risk of MMS? What specifically auditor will perform? So risk assessment procedure includes what and all? There is a theory. We should identify risks through the process of obtaining understanding, including controls, by considering the class of transactions, all that. So for each class of transaction, each class of balances, each class of disclosure, what kinds of risks were there we should identify. Assess the identified risk and see, evaluate whether they are related to financial statements pervasively as a whole and potentially affecting many. Are there any financial statement level risks? Relate the identified risk to what can go wrong at assertion, taking into relevant controls and test them. Consider the likelihood of misstatement, including possibility of multiple misstatements and whether potential misstatement is of the magnitude that could result in a material misstatement. If at all the magnitude of the misstatement is very high, we classify that risk as a significant risk. Risk assessment process includes the risk assessment and internal control chapter question. I always tell people to take it as choice because sometimes we don't understand exactly what this question is dealing with. You have been appointed as an auditor of ABC Hotel, a 3-star hotel for the year 2023. As an auditor, what are the special points that you need to consider in verifying inventories in the nature of food and beverages? It's a straight question in different types of entities. Audit of hotel, food and beverages, how to verify. I'm not going into it. You please read it. Professional behavior is one of the fundamental principles governing ethics. What is meaning of professional behavior? Also give an example of situation where chartered accountants fail to follow this principle. We have seen in one of the MCQ. Like one CA after appointment has sent a request for the previous auditor before accepting the appointment. This fellow did not reply. This is an act of unprofessional behavior. So no. So that's it. The principles of professional behavior requires an accountant to comply with law and regulation and avoid any conduct that the accountant knows or should know might discredit the profession. Like whatever the law he has to comply with, he must know it. If at all he don't know it or he did not comply, it's a disrepute to the profession. A professional accountant shall not knowingly engage in any employment or occupation or activity that impairs or might impair integrity, objectivity, or good reputation of the profession. As a result, would be incompatible with fundamental. A chartered accountant has conducted audit. ICA has issued a letter to him relating to certain matters relating to audit. He didn't even bother to reply. This is a professional behavior. He has not followed professional behavior. Or a chartered accountant was retired from a company and another auditor was appointed. The new auditor has sent a request before accepting appointment to this auditor, and this auditor failed to reply to him on time. He ignored the mail. This is not a professional behavior. Next. CA Judd is appointed as stat auditor of Beta Private Limited for the year 23-24. There exists an internal audit function in the company headed by Chief Internal Auditor CAK. Valuation of trade receivables of the company is assessed as area of high risk by stat auditor. Trade receivables is high risk, okay? He wants to take direct assistance of Chief Internal Auditor in respect of the above. When the area is assessed with a higher risk, their direct assistance should not be taken. There are areas where direct assistance shall not be taken. In the following areas: higher risk, significant judgments involved, or the area of the work which is already performed by them, or matters relating to decision under 610. You should not delegate under direct assistance to internal auditor. Discuss along with reasons whether it should be proper for the stat auditor to assign checking of about trade receivables, aging of trade receivable. See, valuation part you felt high risk, that you should not delegate. Assign checking of accuracy of aging of trade receivable. Company has performed aging analysis for trade receivable. Whether the aging is accurate or not, that you can give under direct assistance. Assigning evaluation of adequacy of provision based on aging. Of course, based on aging only we create provision. Getting it? Provision is correct or not. That point we feel valuation point is highly risky. So better don't delegate this. In accordance with 610, the external auditor shall not use the work of internal auditor to provide direct assistance to perform procedure that relate to higher assessed risk of MMS, where judgment required, is more than limited. More than limited means high judgment is required. In the given situation, valuation of trade receivable is assigned as an area of high risk. Judgment required in checking accuracy of trade receivable is limited. Yes, whether aging analysis is proper or not, the judgment that auditor applies is very limited. Why? Yeah, debtor age is what? From after the due date, for how many months it is outstanding? Just to look at the books of accounts and fill the number. This requires no judgment. You need not think and apply. Whereas provision, it's an analytical process. We should apply case to case. We should look at the symptoms. We should look at the movement in the account. We should look at the communication happening with the company and the other party. Accordingly, provision we should recommend a doubtful amount. Getting it? Therefore, external auditor can assign checking of accuracy of aging to internal auditor, providing direct assistance, as it is limited judgment, because no aging analysis is based on facts. Whereas evaluation of adequacy of provision would involve more than limited judgment. Means higher judgment will be involved. It is not limited judgment. It is more than limited judgment. So it is not appropriate to assign that later. Means valuation part. In provision part to chief internal auditor providing direct assistance. It's a very good question. Compulsorily you read this without failure. Next, the audit of government expenditure is one of the major components of government audit. Briefly explain basic standards set related to government expenditure. What are the points you need to verify in government expenditure? Audit against rules and regulations, audit against sanctions, audit against provisions, audit against propriety audit, performance audit. Over. You need to write those points. Expenditure audit. The audit, is it matching? The expenditure matching with the rules and orders? Whether sanctions audit, provisioning audit, propriety audit, performance audit. Over. Straight question. It is government audit question. Cine Screen Multiplex is operating cinemas in different locations in Mumbai and has appointed you as an internal auditor. What are the areas that need to be verified in relation to sale of tickets? In our book, it is a cinema theatre audit. First thing itself is tickets audit. Straight question. Given below is a table containing column A and column B. Okay. Column A contains description of certain controls in automated environment. Complete the column B by stating appropriate type of control. Controls over data center, it's a general IT control. Controls over application system acquisition, general IT control. Program change controls, general IT control. Reasonableness check, application control. That's it. What is the type of control they're asking? So that's it. You see automated environment, which is part of risk assessment chapter, inside that discovered. That's it. Next. An engagement partner takes overall responsibility for maintaining audit quality in an audit engagement in accordance with the 220. What are his objectives in taking and emphasizing such a responsibility? Engagement partner has to give emphasis on importance to audit quality and the fact that quality is essential. So that why importance? While performing the work that complies with standards, complying with firm's quality control, issuing the report that are appropriate in the circumstance, and engagement ability to raise concerns without appraisal. Engagement partner shall emphasize on this. The actions of engagement partner shall emphasize on this. It's the SQC question. Able to understand. So SA 220. SA 220 question, not SQC. 220 question. Straight first ethical leadership qualities is there. Leadership responsibilities of the engagement partner in 220. That point. That's it. MTP 1 is over. Okay, continue watching MTP 2. Now let's continue with mock test paper 2 for May 24. So Sanjeev, an articled clerk in an audit firm, is part of an engagement team conducting audit of a company for the year 23-24. It is a small company having a turnover of about 25 crore. During the course of audit, he notices that senior team member has taken the following approach for selecting items for testing reflected in financial statements to obtain evidence. Okay. So what he selected? Let's see. He has selected to test the items debited under machinery repairs and maintenance as expenditure relating to it during the year has increased considerably as compared to last year. So he selected repairs and maintenance, some expenditure item, because compared to last year it increased a lot. Probably in analytical procedure he would have discovered that. Out of purchases, he selected to test purchases from related parties. Okay, related purchases of 5 crore he selected. He has also selected to test all individual items of expenditure exceeding 5 lakh. Besides, he has also selected amount of 0.5 lakh debited under legal expenses to know the purpose why it was made to external legal counsel. Okay. Sanjeev understands that senior team member is using audit sampling for selecting items for testing. Do you agree with him? No, this is not a sampling method. Which risk is involved in the above approach? Discuss with the reasons. If you recollect, in our material, we have covered this point in this particular thing. If you observe this point, when designing test of controls and test of details, auditor shall determine means of selecting testing. We have 3 means of selecting testing. Selecting items to obtain evidence. Well, there are 3 methods. One is selecting all items, 100% verification. Another one is sampling. There is another method, that is selecting specific items. 100% testing is generally appropriate when, we'll see this entire question because it's an important question. The auditor may decide that it will be most appropriate to verify entire population to make a class of transaction. 100% examination is unlikely in the case of test of controls. However, it is more common for test of details. 100% examination may be appropriate when, for example, the population constitute small number, large items, significant risks and other means do not provide sufficient appropriate evidence. And there is a significant risk actually. In that item, significant risk. Then also we do 100% testing. The repetitive nature of calculation or other process performed automatically makes 100% examination cost effective. Like if at all you think there is a mistake possibility and it is repetitively happen, then you will do 100% testing. And another method is sampling, for which you have a sampling chapter altogether, which you have already covered. Audit sampling is designable to enable conclusions to draw from the entire population on the basis of which a sample is drawn and tested. But the question which now we have seen is asked on selecting specific items testing. The auditor may decide to select specific items from a population. In making this selection, he just uses understanding of the entity, assessed risk of MMS, characteristics of the population. So looking at the characteristic of the population, looking at the risk involved, looking at based upon understanding, he may do sometimes selective testing. How he select? He may select only high value items, Just in this particular MTP, he has selected a related party transaction where the amount is 5 crore, or he has selected items of expenditure exceeding 5 crore. Getting it? Or the auditor may decide to examine items whose recorded values exceed a certain amount so as to verify large portion of the total amount of class of transaction in expenditure more than 5 lakh, whatever, beyond a certain limit he want to verify, so that he want to cover major expenses. And the auditor may also verify items, examine items to obtain information about the matter, such as nature of the entity, nature of the transaction. In this MTP2, they have clearly given. So auditor want to verify legal expense account to know the type of payment made to external counsel for that purpose. Yes or no? So high value items. So how auditor might select specific items only? Specific item testing, how auditor will do? The judgmental selection of specific items is a subject to non-sampling risk, obviously, because here you're not following sampling method. So non-sampling risk is there. Specific selection without using statistical technique is selecting. Now the specific item selected may include, the auditor may decide to select specific item within a population because they are of high value or exhibit some other characteristic, significant risk, something. Items that are suspicious, items that are unusual, items that are risk prone, or items that have a history of error. Based on some factor, he will select. In exam they may ask you only this also as a 3 marks question. Auditor, one of the specific testing method which auditor uses is high value or key item testing. What are the examples of that? So you just have to give this meaning, and this is one example, 2, 3, 4. 4 examples are given. Able to understand? Getting it? So this itself can be asked as a separate question in exam. Write about specific items testing, and that's what given in this MTP2. In this MTP2 question paper. Clear? That's it. So the next one. Following is the extract from schedule number 10 of advances as appearing in the financial statements of a branch of a nationalized bank for the year ended. So advances, bills purchased and discounts some 50 crore, cash credits OD and all 150 crore, term loans 75. In carrying out the audit of above advances as a part of stat audit of a branch, a statutory auditor would obtain evidence about certain matters. Okay, when you are carrying out audit of advances, you will generally get evidence on certain matters. What are they? Audit of advances, straight question. It's an audit of advances question. It's an audit of advances question. In carrying out audit of advances, the auditor is primarily concerned with the following: whether advance represent amount due to the bank branch. You need to check whether they are appropriately supported by loan documents and other documents, and see that there are no unrecorded advances. See that is there any advance which is omitted. Obviously today is completely electronic, it is not possible. What is the basis of valuation of advances? Whether it is appropriate, whether recoverability of advances is recognized, recoverability point is considered, nothing but provisions. Whether proper provisions of advances has been made as per RBI norms, accounting standards and GAAP. And see whether the advances are disclosed, classified, described in accordance with recognized accounting policies and practices. That's it. And amounts are included in balance sheet in respect of advances are outstanding at the balance sheet date, and these are the amounts that are representing amount due to the bank branch. That's it. So these points we consider. It's a straight question. Audit of advances. You can open bank audit chapter, look at audit of advances, you will find. CAJ is working as an internal auditor in JKL Limited, a non-listed company. CAJ is working as an internal auditor in JKL Limited, a non-listed company. Okay. The responsibilities of internal auditor include reviewing financial information and performing detailed test on transactions and balances. CAJ is working as an internal auditor in JKL Limited, a non-listed company. The responsibilities of internal auditor include reviewing financial information and performing detailed test on transactions and balances. Okay. He is also responsible for compliance with laws and regulations and ethical external requirements. Okay. Internal auditors related duties are giving. During the year 22-23, services of an employee of a company were terminated. The said employee had filed a suit against the company in respect of certain compensation due amounting to 10 lakhs which were not paid to him. In 22-23 only it was terminated. Based upon the advice from legal counsel, the company had made a provision of 10 lakhs in the financials for 22-23. Good. However, somewhere in the June 2023, there is an out of the court settlement between the company and employee for 6 lakhs. The statutory audit of the company is under progress and audit report has not yet been finalized. How as an internal auditor should proceed? What will you advise? You tell me 22-23 employee service was terminated and the case is pending. and ultimately it was settled at 6 lakhs. But company originally created provision of 10 lakh. Conditions exist on the balance sheet at subsequent settlement out of court. 6 lakhs is the ultimate liability. Adjusting given. So adjust it. So the internal auditor should recommend the management to reduce the provision from 10 lakhs to 6 lakhs over. That's it. So subsequent events or events that are occurring between the date of financial statements and date of audit report in fact came to the knowledge of the auditor after the date of audit report. In the given case, the company has already made a provision of 10 lakhs. However, there is an out of court settlement between the company and employee for 6 lakhs. It is an example of event that provides evidence for conditions that exist on the balance sheet date. It provides evidence on adjustment of provision already made. Therefore, internal audit should ask management to revise the provision downward to 6 lakhs so that financials will be in accordance with accounting standard. Easy. Next. KST Limited is engaged in manufacturing business. It appoints a CAT to provide it an assurance report on financial statements prepared on the basis of historical information. The characteristics of such an engagement is that it involves gathering of sufficient appropriate evidence on the basis of which limited conclusions can be drawn by the practitioner. Identify type of engagement, which of the other two features? It's a review engagement. It's a limited assurance engagement where auditor can only draw limited conclusion. So like a review, limited assurance engagement like review. Review assurance provides lower level of assurance than reasonable. It involves only few procedures than a reasonable. In review, no, we only perform inquiry and analytical procedure. Whereas in reasonable assurance like audit, we do inquiry, we do inspect, we do observation, we do recalculation, we do reperformance, we do analytical procedure. Everything we do. Whereas in review, we just perform two procedures, inquiry and analytical. You will understand this in CA final. We have 2400, 2410 standards in CA final. There you will understand. Next. Written representations about management responsibilities involve confirmation of fulfillment of responsibilities in preparation of financial statements, providing relevant information, and informing about completeness of transactions explained. Yes, very much true. Responsibilities of management have two things. One, they are responsible for preparing financial statements as per applicable framework. Two, they are responsible to provide the auditor with complete access to information. Yes or no? One of the responsibility in SA 580. Yes, in 580 we have seen this. Response objective of 580 we have seen. In that, one of the objectives specifically talks about this. So written representation about management responsibilities involves specifically 1. Preparation of financial statement. 2. Information provided and completeness of. In 580 specifically explained in the original classroom also, regular classroom. So, representation about management responsibilities. Management responsibilities related representation are two things. 1. Regarding preparation of financials. 2. Regarding information provided to the auditor and completeness of the information given to the auditor. That's it. You need to give a clear indication that all the transactions are completely recorded and all the information relevant for the audit have been provided to the auditor. Please read it. Don't neglect it. Planning includes consideration of timing of certain activities and audit procedures that need to be completed prior to performance of further audit procedure. For example, planning need to consider certain matters prior to auditor's identification and assessment of MMS. Discuss those matters. What are the factors you consider before planning the audit? Nothing but materiality, all that. It's a planning question directly. Determination of materiality, involvement of expert, performing other risk assessment, obtaining an understanding of the legal and regulatory framework applicable, analytical procedures to be applied as risk assessment. So before you plan, you need to perform, you need to check all this. This is the audit strategy question, straight question again from the book. In an initial audit engagement, in case of inventories, it's an initial audit engagement and inventory point they're talking. The current period audit procedures on closing inventory balance provide little evidence regarding inventory on hand in the opening balances, beginning of the period. Yes, correct. So current year audit procedures on closing balances may not provide evidence regarding opening balances. Therefore, in such a case, additional procedures become necessary so that auditor may obtain sufficient appropriate evidence regarding opening balance also. Discuss those additional procedures. Observing a current physical inventory count and reconciling it to the opening quantity. This is what? Current, suddenly you go and check current physical inventory matching as per records or not. Reconcile it to the opening balance. Perform auditing procedures on the valuation of the opening, whether opening inventory has been valued. Here, first you decide quantity. You decide quantity. Getting it? Once quantity is over, check the quantity, whatever you calculated, opening quantity with the opening stock valuation reports. And performing audit procedures. Do analytical procedures once. So opening balances, are they correct or not? How do I know? Because I'm not the auditor of the previous year. So closing balance you confirm. For that, do reconciliation and derive opening stock quantity. Now, on that quantity, apply valuation technique and derive opening stock valuation and see the valuation reports of the opening stock. And also do analytical procedure of gross profit and cutoff, whether right accounting has been done in the right accounting period. That's it. These are the procedures additional that we need to perform to get more clarity on the opening inventory value. Very good question. Very good question. I feel this itself can be tested. Next, internal control questionnaire is a comprehensive series of questions concerning internal control. A company is engaged in the business of manufacturing of chemicals. It has two plant locations, one in city A and one in city B, involving whose value of assets. Building at 3 locations is owned by the company. Okay, so 2 locations at city A, 1 location is city B. The company earns handsome profits and does not want to suffer loss due to business interruptions. It has a dedicated department for overlooking insurance matters. As an auditor, prepare an internal control questionnaire concerning this department for obtaining responses whether insurance of plant and machinery has been done on a timely basis. Insurance related questionnaire they are asking. Out of box question, obviously, because they are asking you to apply a creative technique. So now tell me, so insurance, the company don't want to suffer loss at all, whatever the scenario regarding any plant and machineries and all. So what points you will ask? Just apply. Whether insurance policy has been taken on all the plant and machineries, whether the insurance policies were renewed on time, whether the coverage of the insurance sum issued is it equal to the cost of the plant and machinery, replacement cost or cost of the plant and machinery, whether any claims, if at all, suppose no, definitely some machineries and all were damaged or something would have happened, is there any claims lodged by the company, what is the status of the claim, whether the claims are settled timely or not. That's it, over. 4 or 5 points, common sense you can apply and write. Internal control questionnaire, whether quotations were obtained from different insurers before you take an insurance policy. Is comprehensive insurance cover obtained for fire, flood, burglary, earthquake risks, all that? Are 3 locations are covered in insurance? Are all the assets consisting are covered in insurance? Adequate procedure to ensure that asset acquired between renewal dates are also covered. Generally, no. When you take an insurance, no. So you take insurance on the existing insurance. Suppose new machinery you purchased, whether that is also covered under insurance. Is there any official who decides on value for which policies were taking, at what value they're taking? Does officer who decides on the policy value review periodically? Is loss of profit cover taken? Have there been any incidents of rejection of claim? Are there any pending claims where we lodged a claim but not yet received the money? Follow up with the insurer properly? I think this is something, an additional question. Question number 3. TISA Industries Private Limited has prepared its financial statements for the year 23-24. The financial statements and notes to accounts show following information and disclosure in respect of trade receivables. Trade receivables were shown as 240 lakh. Trade receivables you must disclose like considered good, considered considered good, secured, considered good, unsecured, considered doubtful, secured, considered good. I mean, like you need to show it doubtful, considered good. Yes or no, like that you need to show some breakup. This is not correct. Fine, we'll see. Trade receivables aging schedule outstanding for the following period from the due date. Aging schedule we must show less than 6 months, 6 months to 1 year, 1 to 2 years, like that. You see here they have given MSME. This is actually trade payables disclosure requirement. This disclosure requirement is as per trade payables, not for trade receivables. You are part of engagement in conducting audit of the company. Point out discrepancies including omission in the above. What disclosures they omitted regarding trade receivable? Oh my God. Trade receivable disclosure requirement, they're asking items of financials. Do not prepare another table. Don't show table. You just point out what mistakes they did. You see, the above disclosure is not as per Companies Act Schedule 3. The discrepancies are under the company wrongly disclosed information receivable for receivables in the manner which is applicable for trade payable. What is it applicable for trade payable? In that way they disclose trade receivables. No, that is not correct. No distinction of MSME is required for trade receivables. For trade payables only we should show. Trade receivables has to be categorized into undisputed trade receivables considered good, undisputed considered doubtful, disputed considered good, disputed doubtful. Again, how much is secured and good, unsecured and considered good? How much is doubtful? What is the provision for doubtful? And debts due from directors and officers of the company, debts due from related parties, firms or private companies respectively, in which our director is having some interest. Further, less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3, more than 3 years, aging analysis should also be shown. This is the right way of presentation of trade receivables. What company followed is a presentation applicable for trade payables, which is not correct. Next. Being statutory audit of JAL Limited, a company engaged in manufacturing of chemicals, CA Gopika has understood that company is expected to have material work in progress as on 31st March. Okay. State few procedures required to verify existence and valuation of work in progress. It's a items of financial statements audit, inventory audit, work in progress audit. So what is the stage of completion you have to verify? Yes or no? See whether management expert is required. Attend inventory counting if possible as per 501. Look at the cost that is involved. What is the stage of production? Whether the estimate is proper. Whether the cost of work in progress include any abnormal wastage. That's it. Next 3C question. The ascertainment of reporting objectives of engagement helps the auditor to plan timing of different audit procedures and also nature of communications. Give 3 incidents to explain. Reporting objectives of the engagement team, reporting objectives, audit strategy, overall audit strategy. One of the factors, reporting objectives. Inside that reporting objectives, any 3 points have to give. It's an audit strategy question, a straight question. What is the entity's timetable for financial reporting? Discussion with management regarding expected type and timing of reports to be issued, including auditor's report. So you need to discuss with management at the beginning itself, what are all the reports that they need from us, including audit report, what is the timeline? And discussions with management regarding expected communications on the status of the work throughout the audit. So throughout the audit, when and all I should update management regarding status of the work. 3 points are asked. These 3 points are easy. Organization of meetings. So to discuss nature, timing, extent of audit work. So we should organize meetings with the management to decide further audit process, all that. One of the factors affecting the form, content, and extent of audit documentation relates to size and complexity of the entity. State 6 other factors in this regard. I say this is tough question, not because it's actually tough, but because they're asking you to write remaining 6 factors exactly. Unless you remember what are the factors that affect form and content of the documentation, inside that the following are the factors they have given. Those are all factors you have to write. Any 3 or 4, no. They are asking all the 6. I think for every factor, it carries half a mark. Nature of audit procedures to be performed, effect, form, and identified risk effect, significance of the evidence obtained, nature and extent of exceptions identified, need to document a conclusion or the basis for conclusion not readily determinable from the documentation of work performed, the audit methodology and tools used. All these points have to document. In addition to size and complexity of the entity. These are 2 more factors. One of the factor is nature and size of the business, complexity of the entity. Remaining factors are this. These are all factors decide documentation, form, content, and extent of documentation. And we all know the form and the manner of documentation shall be such that an experienced auditor having no connection with the audit shall understand how you planned and performed and conclusions are arrived. It is important to carry out test of controls for checking effectiveness of internal control over sales as a part of debtors audit procedure. Correct. In the above context, state the points which auditor has to consider. You see part 4 of my marathon item audit of in that timestamp balance sheet items is there. Inside that I clearly told this point. This way question can be asked. The same is asked. Only bona fide sales, only genuine sales are recorded. That leads to trade receivable. And all the sales are made only with approved customer. All the sales are recorded in the books of accounts. Debtor amount can be settled only on receiving the cash. See that segregation of duties are there at every point of sale transaction. See, debtors are collected on time. If they are not collected on time, how company is taking legal action? Balances have to be regularly reviewed. A proper system of follow-up should exist for creating provision and doubtful debts and aging analysis, all that. Messrs. SR and Associates are statutory auditors of Vani Textile and Garments Limited, a company engaged in business of manufacturing of various textile products. The auditor has completed the audit and is in the process of forming an opinion on the financial statements for the year 23-24. TAS, the engagement partner, wants to conclude whether financial statements as a whole are free from metal misstatement, whether due to fraud or error. Guide him about factors he should consider to reach the conclusion. It's a straight question. What are the factors to form an opinion? SA 700 related. Whether sufficient evidence is obtained, whether uncorrected misstatements are material, And auditor has to evaluate whether financial statements are prepared as per the applicable framework and see whether qualitative aspects of entities accounting practices, including possible bias and all. These all factors auditor considered before forming an opinion. Forming of an opinion in SA 700, below that discussion is there. Nature of financial reporting itself is one of the inherent limitations explained. There are various inherent limitations. Nature of audit procedure, nature of financial reporting, time and cost, and other limitations. Nature of financial reporting, that point they're asking. When I'm discussing nature, objective, and scope, I specifically to this itself can be asked as a question. It's a straight question. Please read the answer. It's very simple. Discuss the objective of auditor as per 705. 705 modifications to the report, modifications to the opinion in the independent auditor's report. The objective of the auditor is to give an appropriate modified opinion in case if the auditor identified a misstatement, that is, if the auditor has identified any material misstatements in the financial statement based on sufficient appropriate evidence, and the auditor is unable to obtain sufficient appropriate evidence so as to say financial statements are free from material misstatement. So in these two cases, auditor has to give an appropriate modified opinion. That is what SA 705 exactly deals with. That's it. Column A describes a description of certain terms used in banking industry. Complete column B by suggesting the term appropriate. Okay, so they gave a description. Audit of borrower carried out at a bank request to verify borrower's current assets. Banks now will do periodically borrower's current assets audit. Stock audit, we call it as. Stock audit. We don't call it as current asset audit, we call it as stock audit. Limit up to which an entity can withdraw from the sanctioned working capital. Drawing power, yes or no? Sanction limit is the maximum amount of loan that can be granted to you, but drawing power is the amount up to which you can withdraw. They're only asking about withdrawal power. That's called drawing power. Statutory right of a creditor to adjust debit balance in debtor's account against any credit balance lying in another account holder. What are modes of recovery of how a bank can, set off is one of the method. What are the modes of creation of security? Like, what are the modes of creation of security? You remember, one mode of security is what? A mortgage, pledge. You remember this? Set off, in that we have seen set off. Modes of recovery, getting in modes of security. In that last point is set off. I told you an example of where, suppose you are having a fixed deposit with the bank and you have a credit card. Suppose you don't pay credit card, the fixed deposit will be adjusted against the credit card due, and that's called set off. That's the right of a creditor, nothing but a bank, to adjust debit balance in debtor's account, my credit card due, and any credit balance lines in another account of the same debtor, my fixed deposit. The bank can apply set off. That's a way of creation of security. Another way, set off. Creation of security in a bank branch by mere delivery of title deeds, equitable mortgage. That's it. Next, obtaining an understanding of the entity and its environment, including the entity's internal control, is a continuous dynamic process, gathering, updating, analyzing information. Of course, it's a continuous process. The understanding establishes a frame of reference within which the auditor plans to audit and exercise professional judgment. State areas in which such an understanding is helpful. Risk assessment is a continuous process. Getting it? So that question only they're asking. Risk assessment chapter straight away. So risk assessment helps continuous. It helps in assessing the risk. It helps in determining materiality. It helps in whether accounting policy is selected and applied with proper. It helps in identifying areas where special focus is necessary, special audit. It also helps in developing expectations for use in performing analytical procedure. Only if I understand entity, I understand how much is the expected expenditure in that case. So I can compare the actual expenditure. And evaluating sufficiency and appropriateness of evidence, such as appropriateness of assumptions, more management's representations, all that. You are the auditor of a college running different courses operating in your city. During the year, it is noticed that fees concessions to the students has been provided in substantial number of cases. Okay. Discuss how you as an auditor would proceed to verify the same. Audit of education institution, verification of fees receipts from students. Right question. Different types of entities. The auditor shall agree the terms of audit engagement with the management or those charged with governance as appropriate. Correct? The agreed terms of engagement shall be recorded in an audit engagement letter or some other suitable form. Who gives engagement letter to whom? What is included? What is letter of engagement? What are the contents of letter of engagement? Straight question in 210 in our book Ethics and Terms of Engagement chapter. Engagement letter is a document issued by auditor to the management which covers the following elements. objective and scope of the audit, responsibilities of management, responsibilities of auditor, reference to applicable financial reporting framework, reference to expected form and content of the audit report, date and place, sign, all that. Sixth question. Auditor of Sunshine, please go and read the answer. Auditor of Sunshine Limited is of the view that due to greater management intervention to specify accounting treatment, the risk of MMS is greater for non-routine transactions. In view of the audit, is the view of the auditor correct? Yes, obviously, the risk of MMS for non-routine transaction is greater because management will be involved, huge judgment will be involved. Specify other matters due to which risk of MMS is greater for significant non-routine transactions. Greater management intervention to specify accounting treatment for the special non-routine. Greater manual intervention, complex calculations. The nature of non-routine transaction makes it difficult for the entity to implement controls on that. Keeping in the view, the auditor is correct. It's a straight question from risk assessment. Significant risk question is there. Inside the two items, significant judgmental matters, non-routine transaction. So those two related to separate questions we have seen in risk assessment chapter. I even covered it in the part 4 of the marathon. On reviewing internal control over accounting for sales as a part of statutory audit, auditor finds a certain differences, deficiencies in segregation of duties, authorization of sales order, preparation of invoice, preparation and authorization of debit and credit note, and non-following of standard procedures given by the management. The auditor finds these lapses to be significant deficiencies in internal control. Okay, he found a significant deficiency in internal control related to sales. He points it out to the management in one liner. Instructions on internal control related to sales are not properly followed. That's wrong. Is the above communication correct? Remember 265. When auditor is communicating significant deficiency in internal control to the management, auditor shall also communicate the nature of deficiency, implications thereof. Yes or no? What is the effect of these deficiencies? All that auditor has to communicate. So auditor not only to communicate deficiencies, but also should explain potential effect and information to the top management to understand the communication. Therefore, the communication is not proper. It should also be explained to the management what is the effect of not following the instructions specified. It should also explain that such a deficiency can lead to misstatement of revenue and receivables impacting profit of the company. Highlighting the importance of such control, it should be stated that responsibility shall be fixed on concerning person who implement that control. Audit against propriety seeks to ensure that expenditure conforms to certain principles, which have for long been recognized as standards of financial property. Explain. Propriety related straight question. Please read the answer. The auditor needs to direct efforts of the engagement towards matters that in professional judgment are relevant. This is overall audit strategy question. Audit strategy question. One of the important factors in overall audit strategy is directing efforts of the engagement team. Preliminary identification of material class of transaction, account balances and disclosures help auditor in establishing overall strategy. More energies need to be devoted to significant matters to obtain desired outcomes. Give 3 examples. Volume of transactions, like that there is a discussion. Volume of transactions which may determine whether it is more efficient, significant industry development, significant changes in reporting framework, other significant relevant developments such as changes in legal environment. It's an audit strategy question, straight question. CA Ravi Patnaik is conducting an audit of a company for which reporting requirement under CARO 2020 is applicable. He finds that cash credit facilities of 4 crore were released to the company by a branch for meeting its working capital. He finds that out of the above, 1 crore has been used by the company for installing a effluent plant to meet state pollution control. The short-term funds were used for long-term purpose. Auditor has to qualify. Is there any reporting? Yes. Yes. Clause number 9, where whether funds raised on short-term basis have been utilized for long-term purpose. If yes, the nature and amount has to be indicated in the given case. So the matter has to be reported under CARO. That's it. MTP2 is also over. I hope you're confident. So let's begin the RTP related questions. So question number 1, they're quite easy, straight questions picked from study material straight away. Even in MTP1 and MTP2, the questions are slightly tricky, but RTP was so simple. M Motors Limited is a leading Indian automobile manufacturer with many offerings across commercial, passenger, electric vehicles. Okay, the company is pioneering India's electric vehicle transition and enjoys considerable advantage in one of the fast growing automotive market. GR and Associates have been appointed as stat auditor for the year 20 to 23. J and K are newly appointed audit assistants in the firm and are part of engagement team constituted for the purpose of audit of M Motors Limited. However, they are confused about what such an audit tends to achieve. What is the objective of audit? They perceive audit as a guarantee against possible errors or fraud in financials. You know very well, you need to write objective of audit. Do you agree with the perception of both these assistants? Obviously not. In this context, outline objectives of an independent audit conducted in accordance with standards. They're asking SA 200 question, objective of independent auditor, where you need to clearly, first you write the objectives. There is NOS, nature, objective and scope of audit, some first or second question itself. So write objectives of audit and below mention that audit is not a guarantee. Audit only gives a reasonable assurance whether financial statements are materially misstated. Further, auditor cannot discover all the errors and frauds because of inherent limitations. So you just have to write that. So the answer is given. So here it is given. Kindly read this. I'm not explaining because it's a very simple question. Nothing new in this, as it is copy pasted from the ICS study material. So please go through it. Please do not neglect it. Standards on auditing. Standards on auditing apply in respect of audit of historical financial information, whereas standards on review engagement apply in review of historical financial. Explain in detail. Absolutely, they're right. So they're asking us to give what is standards on auditing, what are standards on review. Give examples. Nature, objective, scope of audit chapter only, last concepts they were asking. So what is standards on auditing? And mention that it's a reasonable assurance engagement, whereas in a review we only give limited. Historical financial information means what? It's an information expressed in financial terms in relation to a particular entity, derived primarily from entity accounting system, about what? Economic events which are occurring in past, about economic conditions or circumstances at a point in past. And audit and review, they both are two different terms. Audit is the reasonable assurance and its objective is to reduce the risk to acceptably low level. However, review is a limited assurance. In this, reduction of assurance engagement to a level accepted in the circumstances. So depending on the circumstances, to whatever level it is, they are asking to that level, but it is not to a low level. Standards on auditing, they were issued on various issues. For example, these are all various standards issued. Standards on review, we have two standards, 2400, 2410. That's it. So engagements to review historical financial, engagement to review of interim financial information performed by independent auditor of the entity. These standards we have in CA final, these two standards especially. Next. Preliminary engagement activities include certain activities to be performed by auditor while planning an audit. Discuss such activities briefly. How such activities perform, how performing such activities assist the auditor. Preliminary engagement activity, performing procedures regarding continuation of client relationship under 220, evaluating compliance with ethical requirements, establishing understanding of terms of engagement under 210. These activities will help the auditor in identifying and evaluating events or circumstances that may affect auditor's ability to plan and perform the audit. So by performing preliminary engagement activities, we will understand what are the events or circumstances where our audit can be planned properly. That's then performed properly. The assistant of CAK is assigned responsibility of drafting audit program relating to purchases appearing in financial statements of broad industries, a partnership firm. The said firm is GST registered taxpayer and is engaged in manufacturing and packing of boxes from a paper taxable under GST. Okay, help him by drafting a sample audit program for purchases. Sample audit program for purchases. If you remember, or if you open our book or ICA book, audit program topic is there. Below that, exact program for purchases is given, the same as it is. Straight away I say questions. So sample audit program, name of the entity, financial year, prepared by whom, reviewed by whom, approved by whom. That's it. Straight questions in RTP. The questions are very damn simple, very simple. Satranga Foods Private Limited is engaged in manufacturing of pickles. Wait, are you reading the answers of the previous 4 questions? I will proceed to the next question immediately after explaining. You have to read the answer. It is like a revision for you. Try to read. If at all you're having time, try to read. Satranga Foods Private Limited. If possible, try to find out the answer in our book. Whoever our students were there, whoever is following my book, especially, you try to find out the answer in our book and read if possible. Or else you can read from here. You can recollect where it is there in our book also. Satranga Foods Private Limited is engaged in manufacturing of pickles. The auditors of the company have planned audit procedures in respect of recognition of revenues of the company. So they are doing some procedures for revenue recognition. Despite that, there is a possibility that misstatements and revenue recognition are not identified by planned procedures. Identify and explain what type of risk. Even though you are performing audit, you cannot identify some material misstatement. Identify and explain what is this particular risk. What is this risk? Even though we perform audit, we can't detect detection risk. Yes or no? There is a possibility that a planned audit procedure may not achieve desired result and fail to detect material misstatement in revenue recognition, and such a risk is called as detection risk. Detection risk array is a risk. SA 200. One student has asked me, sir, detection risk concept and all we covered in risk assessment chapter, which is Delta under 315, right? But definitions, audit risk, inherent risk, control risk, detection risk and all were mainly defined under 200 itself. Getting it? So the same detection risk once again discussed in 315 also. So SA 200 defines detection risk as the risk that procedures performed by auditor to reduce the auditors to acceptable level will not detect a material misstatement. Getting it? For example, auditor of a company uses certain procedures for purpose of getting evidence regarding to reduce risk, but still there will be some risk, some mistakes will not be detected. Why detection risk arises? Detection risk is because of sampling risk and other risks because of non-sampling risk. Read it please. IT related risk can have an impact on audit. Yes, it have an impact. In what different ways such risk can have impact? Impact on substantive procedure, impact on compliance procedure, impact on reporting. Automated environments type question. I'm not reading that answer. CA Kanika audited books of accounts of Engineering Limited for the financial year 22-23. The auditor used an audit procedure according to which all the documents and records maintained by the company were checked in detail to obtain audit evidence. Explain the audit procedure used by auditor. Comment on reliability of audit evidence obtained by performing such an audit in some situation. What is it? The auditor used an audit procedure according to which all the documents and records maintained by the company were checked in detail to get an evidence. Explain audit procedure used by the auditor. What audit was? This is called inspection. He checked documents, records. That's called inspection. Getting it? Comment on reliability of evidence obtained by performing such an inspection. Write the entire matter below inspection. In audit evidence essay 500 topic, we have clearly discussed what are various audit procedure: inspection, inquiry, inspection. Below some points, but the exact inspection points have to write. Next. CAJ is conducting statutory audit of Gemini Limited engaged in manufacturing of pharma products. The company is fairly large one and has a well-functioning internal audit department. While considering sending out external confirmation request to trade receivables outstanding as on date of the financial, CAJ has delegated the process of choosing trade receivable, designing the request, receiving the response from customer to internal audit department. The responses are also received on the mail ID of internal auditor. Is the approach improper? The external auditor shall maintain control over external confirmation procedure, selecting the selecting the information to be confirmed, designing the confirmation request, and selecting the appropriate party, sending the request and follow up the request. This and all is the steps in the external confirmation. External auditor shall have control. This is wrong, complete. This is a question there in ICS admittal also. Look at this 8th question answer. While using external confirmation process, the auditor shall maintain control, determining the information, selecting the confirming party, designing and sending the request, getting it all that. It appears that external auditor has delegated entire work to internal auditor over which he has no control. Further, responses were also received. All these are not as per 505. Direct confirmation. External confirmation means response must be received by the auditor directly from the third party as a written response. The newly appointed auditor of BTN Limited wants to obtain sufficient appropriate evidence about whether opening balances contain misstatements that materially affect the current period financials. What procedure he should perform? Very straight, simple. The auditor of BTN Limited shall obtain sufficient appropriate evidence about opening balances, whether they contain material misstatement that affects current period, by checking whether prior period closing balances were correctly brought forward, any adjustments were disclosed as prior period, whether opening balances reflect accounting policies consistently that are being applied. Specifically, you need to perform the following. You need to compare prior year financials if they were audited. Perusing means verifying the copies of the audited to the prior period financials, whether audit procedures performed in current period, are they giving evidence performing specific procedures to get evidence regarding opening balances. It's a straight question in SA 501. SPR Limited has been into, by the way, while explaining class also I clearly told all these questions, how different way it can be asked. Even in MTP1, MTP2 also for May 24, this is RTP for May 24, obviously. So I have clearly explained in the class all these questions, how these 3 points can be tested, how these 4 points can be tested, exactly they were tested. SPR & Co has made into the media businesses since 2001. During the year 20 to 23, many notices were received by the company for hurting public sentiments and financial claims were filed against the company. As an auditor, you requested the management for arranging meeting with the company's external legal counsel. Management is of the view that such meetings are necessary in few circumstances only. Can you list out? Yes, we have seen in external, in SA 501, litigations and claims, there we clearly discussed. There are some circumstances where we send a specific letter of inquiry to external counsel, and there are some circumstances where specifically we want to meet. When we will meet, then auditor determines matter is significant risk, matter is complex, and there is a disagreement between the management and external legal counsel. When there is a disagreement over a letter of inquiry and all, maybe you want to directly meet. I told you this itself can be asked as a question. In fact, this was asked in CA final also once. Chapter 5. Proceedings have been initiated against Falls Limited for holding Binami property under law relating to prohibition of Binami transactions and the rules made thereunder, but such property is not recorded books. As a consultant, what will you advise the company so far as disclosure requirements or concerned, regulatory information? So no. So Binami related details of the property, amount thereof, details of beneficiary. If the property is not in books, you must mention the reason where the proceedings are against the company. Like the details of the proceedings has to be given, nature of the proceedings, status of the same, and company view on the same also you have to show. Roma Shoes Private Limited was established in 20 to 23 for manufacturing of footwear. As funds were needed to carry on its business activities, including for purchase of different raw materials, including regular expenses like power, fuel, payments of wages, it has got sanctioned a credit facility amounting to 2 crore repayable on demand from a bank against primary security of its current assets and collateral security of residential house of one of directors, repayable on demand. Remember, duly signed guarantee documents by director in favor of the bank are also form part of the loan documentation. Directors also given guarantee. Account statement of the above facility downloaded from the bank website shows a debit balance of 1.585 crore, means there is a liability. Bank books of accounts debit balance means we have to pay. The operations in the above credit facility are satisfactory. In this regard, identify nomenclature of such credit facility. It's a cash credit or overdraft facility. How would the amount of 1.85 crore should be reflected? It's a short-term borrowing. Yes or no? Overdraft facilities, all that we will show it under short-term borrowings. Also state specific disclosure requirements for short-term borrowings. Nothing but indirectly they're asking short-term borrowing specific disclosure requirement. Nature, specific disclosures. We need to give what security we give. And whether if they are guaranteed by directors, the aggregate of the amount of the guarantee given by directors. Additionally, whether quarterly statements filed are the matching with the books of accounts. If not, summary of the reconciliation along with reasons for differences. Please read the answer. Following is the extract of notes to accounts of the financials of STU Private Limited listing some ratios. Whether disclosure given in the following manner meets requirements of Schedule 3 of the Companies Act. Ignore other ratios which are not listed, just to look at the following. So the company gave the following information related to some ratios. Current ratio last year, current year. Inventory turnover ratio last year, current year. Trade receivable ratio last year, current year. Net profit ratio last year, current year. Now we all know important ratios we should use. Some ratios have given. Along with that, if there is a percentage of change in the ratio compared to last year to this year is more than 25%. We need to give reasons why there is a change for more than 25%. Yes or no? Between this, very simple. 2.3 plus or minus 20%. A plus or minus 20%. 2.3, here it is increased. So let's apply add only 2.76. So it is since less than, 25%. 2.3 plus 25%. 2.875. Since increased only up to 2.5, less than 2.8, no need to give reasons. Whereas here you see 6 last year. Now it reduced, means the minus you should apply. 6 minus 3 divided by 6 is equal to 50%. The ratio has been decreased by 50%. Here 5 minus 1.75 divided by 5 is equal to 65% change. 10 increased here. So 3 divided by 10, 30%. These three ratios were changed by more than 25%. More than 25%. How do you calculate percentage? Last year plus or minus current year divided by last year. multiplied by 100. This is the formula to calculate the change. So I calculated. So these three ratios have changed by more than 25%. So the company has to give details, information of what is the reason behind this change. Here company did not disclose. You need to mention that. Rajani, a CA student, has understood that SA 230 requires auditor to prepare audit documentation on a timely basis. While reading about SQC1, she notices that time limit for completion of final audit file is ordinarily not more than 60 days after the date of audit report, correct? She finds it to be puzzling, unable to comprehend. She seeks your guidance. Okay, you need to talk about assembly of what? Remember, here it is on assembly also. Understood that 230 requires you should prepare documentation. Yes, you have to do assembly of documentation on a timely basis as and when the work gets completed, because documentation prepared after the work gets completed is less effective than the documentation prepared at the time when the work is going on. Moreover, once on completion of audit, the final audit file shall be assembled within 60 days. Within 60 days from the date of audit report. So just to mention that. Therefore, auditor shall prepare documentation on timely basis. However, for completion of final audit file, 60 days after the date of audit report. That's it. Next. Discuss the meaning of completion memorandum. Elaborate upon its importance. What is the meaning of completion memorandum? Completion memorandum means audit summary memorandum, documentation question, last question, straight question. I'm not reading. Please read the answer. It will be a revision for you. CAK is statutory auditor of DEMA Private Limited for the year 2022-23. The company has 3 plants in India. He is nearing completion of audit procedure relating to financial statements for the year under audit and yet to sign the audit report. Meanwhile, a huge fire had broken out in one of the company located near Nashik on 25th June. 31st March is the closing. After 31st March happened, it's a non-adjusting event, damaging substantial part of the machinery and work in progress, resulting in loss for 5 crore. Unaware of this accident, he doesn't know about this. He is in the process of finalizing his report in July. When you are processing in July, you must know this incident and all. No, you must do some subsequent procedure and all you have to do, right? Subsequent event procedure. Okay, this is adjusting, non-adjusting, but you must do subsequent, right? State view procedures to be performed by him to obtain evidence regarding such events. Also explain audit responsibility in this situation. In this situation, auditor may have to disclose the impact. That's it. It's a non-adjusting event. In the given situation, a huge fire has broken, destroying. So the auditor has to yet to sign. Before signing the report, he should perform the following subsequent procedures, subsequent event, inquiring management whether any event happened, reading minutes of the owners and all. Yes or no? So reading entity's latest information, getting representation that all the subsequent information, so knowledge has been given to the auditor, whether it's adjusting or non-adjusting. This situation is an example of subsequent event occurring between the date of financials and date of audit report requiring disclosure in the financials. The auditor has responsibility to get evidence whether such an event requiring disclosure, whether it is appropriately disclosed or not. Next. Kundan, a CS student, is part of an engagement in conducting audit of an entity. The audit procedures are nearing completion. He notices that engagement partner has asked for a cash flow forecast from the management for the next 12 months, going concern point, from the date of financials. Keeping in view, discuss likely purpose of the engagement partner in the above situation. The engagement partner is trying to analyze entity's ability to continue as a going concern. Whether any events or conditions that may cast a significant doubt on entity's ability to continue as a going concern. So auditor want to evaluate cash flow statement to check the financial position of the entity. Further, it is also important in CARO reporting. Yes or no, 19th clause. Elaborate upon significance of such testing. Of course, state any 2 procedures in relation to cash flow forecast. For cash flow forecast, what points you need to check? Whether the data is based upon reliable underlying data. Whether the assumptions used to prepare cash flow forecast is it genuine, reasonable assumptions. These 2 points we should check. The audit procedures were nearing completion. Therefore, the purpose of engagement partner is to obtain sufficient appropriate evidence regarding and to conclude on the appropriateness of management's use of going concern base of accounting in preparation of financials. Further, his purpose is also to conclude on the basis of evidence obtained whether a material uncertainty exists. The significance of testing of going concern is due to its effect on preparation. When use of going concern is, this point is not required to write in exam. First 2 paragraphs are very good. And 2 audit procedure in relation to cash flow forecast. Evaluate reliability of underlying data generated to prepare the forecast. Now, generally forecast means it's based on assumptions. Determine whether there is support for the assumptions underlying, whether the assumptions are reasonable or not. Next. Mention some examples of circumstances where auditor may consider it necessary to include emphasis of matter paragraph. Write the definition of emphasis of matter paragraph. Give examples. Direct question from essay 7 or 6. Yes, sir. while conducting audit of an entity is facing the following issues. He has not been provided with the necessary support for attending inventory count. Okay, he is not allowed inventory counting. Accounts manager is not providing him present address of customers as well as suppliers for sending external confirmations. Email ID is also not given. He was not been able to verify revenue. He has been asking for bills on a sample basis for verifying expenses, but staff is giving lame excuses. Multiple uncertainties. The matter was brought to the knowledge of the higher management, but of no use. The auditor has come to conclusion that the possible effect on the financials of undetected misstatements would be material and affecting many aspects of financials, and in such a case, a qualification of the opinion would be inadequate to communicate the gravity of the situation. How should the auditor proceed? If auditor has encountered an exceptional circumstance where auditor is, unable to obtain sufficient appropriate evidence, and giving a qualified opinion is not sufficient to communicate the gravity of the situation, and the possibility of material misstatement could be material and pervasive, auditor should withdraw from the engagement. First, if withdrawal from engagement is not possible, getting it permitted under law, you must issue a disclaimer of opinion. If at all you are withdrawing from the engagement, up to the date of withdrawal, whatever misstatements you identified, please communicate with the management and then withdraw. Read the answer. It's 705 question. Pilfering is one of the greatest problems in any hotel, and the importance of control cannot be undermined. Hotel audit, different types of entities, pilferage, starting discussion only food related. From a lessee's perspective, highlight the main difference between operating lease and finance lease only in relation to accounting treatment and tax benefit. Lessee point of view. Accounting treatment. Operating lease is generally treated like rental agreement. Lease payments are treated as operating expenses, and asset do not appear in the asset of the balance sheet. That's what accounting. Whereas finance lease, it is treated as a loan arrangement. Hence, asset ownership is considered of that lease and thus appear in the balance sheet. So from tax point of view, operating lease is considered like expense. However, no depreciation can be claimed. Whereas in case of finance lease, lessee can claim both interest and depreciation as it is treated as a loan. Next, audit of banks. While conducting statutory audit of a branch of a nationalized bank, it is noticed by Z that credit facilities granted to borrower consist of term loans which are classified as substandard. It's an NPA. During the year 2022-23, due to failure of the borrower to pay EMIs on time. Such EMIs were outstanding for more than 90 days and account was therefore classified as substandard, which is correct. CAZ has also agreed for the above classification. What are CAZ responsibilities regarding verification of compliance with income recognition norms? Once an asset is classified as an NPA, on that, interest income can be recognized only when actually received. On accrual basis, you should not. If at all any interest income already recognized on accrual basis but not yet collected shall be reversed. That's it. Read the answer. Just a minute. Next. While verifying provisions of advances of a branch of MCO bank as a part of statutory branch audit, CAZ notices that credit facilities consisting of term loan to KRT enterprises have been classified under doubtful asset D1 category. D1 category means what? Doubtful asset less than 1 year. Getting it? The outstanding balance in the above term loan 50 lakh. The value of the security held is 40 lakh. The branch has made a provision of 7.5 lakh. That's wrong. If the asset is classified as doubtful, unsecured portion, total loan is 50 lakh. Secured portion 40 lakhs loan is at 10 lakhs. On this 100% provision, whereas in first year on doubtful asset 25% provision. So which is equal to 10 lakhs, here is equal to 10 lakhs, which means total provision to be created is 20. Is the provision made by branch proper? No. 20 lakhs is the total provision, whereas bank created only 7.5 lakh. Next. CAX has been offered audit of financials of TDK Industries, a partnership firm. Prior to accepting the proposed offer, he insisted upon getting an agreement of the management regarding acknowledgement of responsibility for having proper process in place to ensure that financials are prepared free from material misstatement. However, management is of the view that it is auditor duty to identify material misstatements in financials, and such an insistence by auditor is totally uncalled for. Whose view is proper? Auditor is correct only. Also discuss reasons for arriving at your conclusion. What should be likely course of action in the above? If at all management is not agreeing for precondition, this is a preconditions to audit. If preconditions to audit are not present, do not accept the audit. Read the answer. SA 220 is premised on the basis that the firm is subject to SQC. What do you understand by the given statement? You open SA 220, initial 3 points are there. That only. Please read the answers. That's it. RTP is over. All are straight questions. MTP is only somewhat tricky. MTP1, MTP2. RTP is so easy. Okay, that's it. All these questions, 25 questions were there in RTP. In MTP1, approx 20 questions were there. MTP2, 20. Totally, I can say in MTP, yes, obviously, 6 questions were there. 6 questions into 3 or 4. Yeah, 20, and this one. Approximately 65 questions we have solved practically. Getting it in this particular entire session of MTP1, MTP2, RTP. That's it. These are the top 65 questions if you ask me. Okay, that's it. All the very best. Do well. I know you will do well really. And by the way, just there is small change. If you observe, all my videos, I was on the right side of the video, but now I just made it to the left side. I hope this is much more convenient to you. Thank you.